Good morning, YouTube fam. Happy Friday. Let's see if it's going to be a happy day on the charts. Quite a bit of action yesterday. I want to talk about it. A few things that are very important to look out for today and over the weekend. I don't normally trade on Fridays. However, I will be looking for something specific, which I wanted to show you guys. Quick check over the markets in general. You can see up here in the top right at a glance, Bitcoin is moving up beautifully, has not yet cracked that 44.6 that it needs to get above to break resistance, but we'll look into that a bit deeper in a second. Ethereum as well, W still playing out, but still has to get above this 3180 area. Over here, the USDT dominance has now definitely broken that trend line and looks like it's heading down to that support level there. S&P down here in the middle is looking good. Dixie's looking good, and gold is having a bit of a bounce. All right, I really want to focus on Bitcoin and potentially Ethereum in this video, so let's get right into it. If you are new here, welcome, and if you are returning, welcome back. Please be sure to hit the subscribe button. I am attempting to do a Bitcoin analysis on the days that I trade, which is usually about 3 days a week. So if you like those regular updates, please be sure to hit the subscribe button down below. Give me a like on this video, and also turn that bell notifications to on so that you can be notified every time I do upload a video. Let's take a quick look at the fear and greed index before we get into it. We can see that's rising. Okay, so that just means that retail's getting a little bit confident. We would expect that when Bitcoin is pushing up. But let's talk about yesterday first. So on yesterday's video, I was expecting this break to the upside, and I said to be cautious of a potential double top, which we did have on yesterday's session, and then needed to wait and see if we got a rejection within this red zone. So we didn't get the rejection. That's what I want to talk about mostly. As you guys know, I use Trading Light to get my levels in addition to TA, and these white dotted lines here were the levels that we had to watch yesterday. So see, now that we can look back, see how when those two levels were marked, see how volatile price was within the levels. Now, the thing that you got to understand about Trading Light is all it's showing us is the limit orders that are in the book in the current moment. Now, a limit order, of course, is able to be cancelled at any time. So you have to know how to actually read the heat map in depth. If you would like a tutorial on how to do that on this channel, I'm happy to do it. Let's get this video to 100 likes and I will do an in-depth Trading Light tutorial for you, and also leave me a comment, let me know if that's what you want. However, point being, with these being limit orders, you have to understand that until price actually gets to that level and picks up the order, that can be cancelled. So it is something you have to watch live in the moment. So what would usually happen is, if you can see a very big number, we'll go back on some past candles. So you're looking at all the red there, they are big standout numbers compared to the other levels. What happens usually is, if that number is really quite significant, then you'd have to expect that when price gets there, it's not going to pick up all the shorts in one hit. So when we come back to have a look at this, you can see here price spiked up, picked up a few of them, then it retraced. Then it came back to pick up a few more, retraced, came back to pick up a few more. And so in the zone where you see all of the short orders or underpriced, all of the long limit orders that are in the book, you would expect price to hit that zone a number of times if the order is really big before it actually has any effect. But here's the thing you can't see. You can't see market orders, right? So even though you might see really big short orders up here, it's not a guarantee that price is going to reverse at this price, because for all we know, there could be market order longs at this level that are much more significant than the limit order shorts that could push price up. And the only way to know that is to watch the trades section. Right now there's nothing. Let me change these settings and see if we can bring it up. So you'll see all the orders start to come in here, and the best way to use this is that at the time, if you have a level where you can identify that there are going to be really big short orders, as price starts to get close to that level, you want to see this whole column turn red, right? And in the case of a long, say price was heading down and you saw a really big order under the current price, as price came closer to that, you'd want to see this whole thing turn green. When it's mixed like this, a mixture of green and red, there's a battle going on in that area. Think of it like a tug of war. No one's winning. The bears and bulls aren't winning this. It's an even fight. We need to see when majority comes in of the significant orders of one color, which way the market may go. So point being, in this zone, that there would have been what to watch at the time. Now, this happened on US time zone, so my sleep time, so I can't say what happened, but what I would have imagined happened was, see how many dojis are in this area here? That was the tug of war. So I would imagine that there were lots of buys and sells in this area. Nobody was winning. Eventually, price pushed through. So that would mean that these two, if they stayed there at the time, if these orders stayed there at the time, which is impossible for me to tell because it was during my beauty sleep, then they all got absorbed by buys that were stronger. And the other thing too was, on yesterday's video, I mentioned to you that the liquidations, the long liquidation level was only at about 10 billion, and that wasn't high enough, and that could expect a breakout to the upside to encourage more retail to go long to build that up. And I mentioned to you that somewhere between 20 and 30 billion is what I like to see to then start looking for potential reversal. So let's take a look at high block now, and looking at this today, look at that. We've hit the 21 billion. Now, why is this significant today of all days? Today is futures expiry, and it's a significant one because we have not only the monthly closes, we have the quarterly and the 6 monthly closes. So March and September are the biggest futures closes in the entire year. And usually that's why they say September is always a bearish month. March is on and off bearish and bullish, but just because we have expiries doesn't mean we should be expecting a huge dump. If we have a look at the max pain index over here, the expiries for March 25, which is today, the max pain is at 42,000. And if we change that to the ones for tomorrow, the max pain is at 43,000. The way that I personally use max pain is I don't use it as a guarantee of where price is going, but I use it more to understand direction of what might happen next. So when the max pain is under current price, so currently Bitcoin is 44K. When the max pain is under current price, I expect some sort of a reversal to get price closer to that number. When max pain is above current price, I would expect some sort of push up to get us closer to that number. The thing is, we're only $1,000 away, so it may not mean anything. It's nothing, in my opinion, concerning for particularly today. However, when I switch out to other options that are expiring in a few days' time, max pain is now down at 40,000. So this is leading me to believe today may be a bit of a nothing day. I'm not exactly sure. We'll have a look at the charts in depth in a second. But if today turns out to be a bit of a nothing day, I would expect that we may see a weekend reversal. And why do I say that? Because the weekends is where the volume is lower and it's easier to move the market. So considering we've pushed up so much, you have to ask yourself then, well, did the market maker push price up into the weekend knowing that retail are the only ones that buy on the weekend and retail generally buys the tops? So could it be that we get a lot of buys in this area and then get a sneaky weekend reversal? But the question then is, well, is this the top? So let's have a look. Okay, so currently on the daily, we are respecting this ascending triangle pattern. Now, ascending triangles are one of my favorite trades to take, but I never take them as breakout trade. And here's why. If I was to take this as a breakout, expecting this one to be the one that breaks resistance, my stop loss has to be somewhere under this higher low here. The target is at the next resistance just up here. That gives me a terrible risk to reward. And we know that after every push, there's always a pullback. After every push, there's always a pullback. Every push, always a pullback. So why would I buy the top? It doesn't make sense. How I like to play an ascending triangle is 3 touches to the resistance level, then a higher low. The higher low is my entry, because if we can get 3 touches to resistance, then usually the 4th attempt is a breakout. So currently we have 1 touch here, 2 touches here, and this one is trying to come up to create touch 3. But here's the thing, it hasn't yet. And if this was the best we got out of it and it did something like that, then in fact what it's created is a lower high, which is bearish. So just as I said, the higher low within an ascending triangle would cause a breakout for me, a lower high within an ascending triangle would lead me to think we're going to break down. Now, I am filming this, of course, before the daily open of the Australian and Asian times. So my intent is to tell you what to look out for today. And definitely we know that this zone is a very key zone up here. Price needs to break out of this zone and successfully retest it in order for us to be bullish. However, as I mentioned, if price were to break out of this zone and retest it here, that in my opinion would not be where I would want to buy after such a big move up like this. What I personally would be looking for is for price to actually reject. Now, give me that higher low, then an entry would be there. And the interesting thing about this too, if we do get that higher low there, it's going to be right above this point of control here, which is at around 39,000. So that's an ideal scenario, of course, and it would be pending on, price actually holding at this higher low and not breaking this trend line. But we don't always get what we want, but we also shouldn't chase trades. Looking at the RSI, if we did get a play like that, it could also cause this RSI to come down and test the 50 level. And if it bounced off that 50 level, that would be super bullish as well. So if Bitcoin plays nice, we actually will get a pullback today. No, it shouldn't be scary as long as it holds above this, say, $39,000, $40,000 region. We're going to go to the heat maps to see if we can see anything around there. But before I do that, let's just take a look at the lower time frames. So on the 4 hour yesterday, what I was cautious of was this whole area here looked like it was creating a rising bearish wedge. I personally like to draw my trend lines to mostly candle closes. However, if this one was to wicks, then this rising bearish wedge is still in play. So seeing a rising bearish wedge leading up to an area of a previous resistance leads me to think that, again, we should be cautious of some sort of retracement at the very least sometime over the next few days. Now, what could cause a sell-off though that might bring price back down, besides the options expiry and the max pain levels that we already talked about, would be the leverage levels. Now we're at that 21 billion. That's a concern. That's a massive rise from yesterday when we were sitting at 12 billion. This is just on Binance, by the way. And what we want to see now is, are there any huge shorts above current price that they haven't actually come for yet? And looking at this, the only real standout to me is probably this one up at 44.95. So let's say 45,000, which would bring us to the top of this resistance here. Not sure if they'll bother coming for that. It might not be necessary, but here's what I would be waiting for. Now knowing that there are 20 billion worth of longs at risk of liquidation on Binance, now knowing that this is futures expiry, now knowing we're in a rising wedge, now knowing we're at resistance, all of these things tell me to start looking for a reversal. So what does a reversal exactly have to look like? And for me to show you that, let's go back to yesterday's price action where we were looking for the reversal. So that was on this breakout here, and we were looking for a reversal in here. For me personally, the way I really like to see a reversal is either a double top, which we did get the double top here, but then after a double top, I like to see an M pattern. So it needs to look something like this. This was the start of an M, but what needed to form next was the second peak. For me, I like the second peak of an M to be a lower high compared to the first peak of the M. This was the part here that we did not get. And therefore, just because we were in the zone to short yesterday, we didn't get the final confirmation from the candles in order to short. So what I'm looking for now is a repeat of the same thing. If this here is the beginning of an M, I'll be waiting to see if we come up, create a lower high within that zone, and then that's where I'll be expecting a potential reversal. At the very least, back to this trend line. Next target is going to be down at the point of control at around 41,750, and then a reassessment of that should it be a super dramatic sell-off. Now let's match those levels up to Trading Light and see what we can find. So there's a lot of orders. See how much red there is in Trading Light right now above current price? There is a lot of people trying to short Bitcoin right now, and this is on Binance. So there's way too many levels for me to mark out. I'm going to look for the most significant one, but just know that because it's significant doesn't mean we're going to actually reach there. Looking at this at a glance, the most significant is 44,500. So when I mark that on this chart, you can see that that is all the way up here. However, bear in mind that below that level here, there are still a lot of other short orders, and they may be the ones that cause the top. So there's no guarantee that, well, there never is anyway, but there's no guarantee that we're going to get up to this 44,500 region. I would be looking for rejection anything below it, to be honest with you. Currently, the longs, we're trying to hold price up at around 43,500. And so now that those two are marked on the chart, it kind of lines up a little bit perfectly with the idea. What I would be looking for is maybe we won't get higher than this cluster here. It's hard to say before the daily open. You really need to watch the daily open, see if there's a little last minute rally before a sell-off, or we may just break down from this because this is just a sideways consolidation right now. So what may happen is if price breaks down from this consolidation, this might be the last attempt area for bulls to long. That I wouldn't long it from there, certainly would not long it from there. But what I would be waiting for is let them try to push price up that last time, see if it does create that lower high. And if it does, that could be an indication to short. That is the degen way of trading though, because this lower high would form within the higher time frame rising wedge. If you want to be a conservative trader, you would actually wait for that wedge to break, wait for the lower high to form outside of it, and then short down. It just depends on how you personally like to trade. And currently on Binance, all I can really see is down here. It's not significant enough, but at 42.2, there are some very patient traders hoping for a dip down there to buy. You can see that that lines up with this level here. However, if price did break down only to there, I would expect that to be just the A leg of an ABC correction. So I would expect if price did break down to here and bounce, I would then look for a 61.8 reversal and start planning for Bitcoin to come back down to potentially this level here at around 40.4. So we may not get a push all the way up there. Hard to say. We are just consolidating sideways. I'd be watching for a breakdown of that level. See if we get one final bounce to short. That's going to be my play for the weekend. And if we do short that, my next step is going to be wait to see if we break this trend line. And then finally, if these orders are still here at the time, see if we get a bounce, draw fibs on that whole level, and then see if we're going to break down further. As I personally don't really trade on the weekends, my play is probably going to be to take the short from that lower high there if it actually happens and take it as a swing trade rather than a scalp. All right, I do want to take a quick look at ETH before we head off. I'm sorry, this video is longer than normal. All right, Ethereum still forming this beautiful W formation, has broken this downwards trend line now, and now again potentially may create an ascending triangle as well. We really though can't really call it an ascending triangle, however, when there is only the one touch to the resistance. But this level here, this has been the concern the entire time. So it's currently looking fairly weak. The daily on OKX is different. It says 17 hours here. It's different to everything else. Let's actually quickly switch to the Binance to get the proper daily candle. Yeah, so on Binance, if this does turn out to be an ascending triangle formation, it hasn't even formed yet. So with Ethereum, if this does turn out to be an ascending triangle, then again, it's this zone that needs to break. It's not an ascending triangle right now because we only have one touch to this resistance. This was a lower high here. Price is currently coming up. This could end up being only touch 2. I would not long out of touch 2, and I wouldn't even long out of touch 3, to be honest with you. So for me, Ethereum in a perfect scenario, which crypto never gives us a perfect scenario, but I would like to see Ethereum do this, create the higher low here, then there's the breakout, and that could be weeks away when we're talking about a daily time frame. So it may just end up that this is not a ascending triangle, and instead all this is a break in trend, a W formation. The W formation needs to complete by breaking above, coming back to retest, then we would expect continuation to the upside. But if it breaks above and it only does something like this and then retests that after such a big move up, that again is not a play that I would personally take. I would want to see something decent if it was going to break and maintain a new bullish market structure. So even though Ethereum's looking good and probably causing FOMO in retailers, and probably all the alts are causing FOMO in retailers and even Bitcoin right now, I honestly do not think it's the time to buy. We are at such a potential to be buying tops right now going into a weekend with the high long leverage in the market that all of this screams to me, be cautious. And even without all of that, you don't buy pumps anyway. We buy the pullbacks. On a lower time frame with Ethereum, the good news is that we have a higher high now compared to this, but we don't yet have a higher low. So again, still need that pullback either way. Now, yesterday, Ethereum did look like it was in a rising bearish wedge at the top of an uptrend. So reversal was something to look out for. Again, if you draw it to wicks, we're only just at the top of that right now. I would be careful of some sort of a pullback. At the end of the day, if the price continues up from here and we're super bullish, you can't really long it anyway if you have proper risk management, because you have to be wary of this level that it's got a breakthrough, and then your stop has to be under this whole run. So your risk to reward is terrible. So unless there's a pullback over this weekend and an opportunity to get in, there is no long trade. There just isn't if you want to be a professional trader. A professional trader wouldn't buy the tops. However, in saying that, there's also no guarantee that a pullback is going to be a pullback and not a full reversal. So definitely need to wait for that. Probably in the start of next week. If we do get a pullback over the weekend, you need to wait for the start of next week to see where the market maker actually wants to take price. All right, guys, sorry for the long video today. I just wanted to get those two things out there and give you enough to know what to watch over the weekend. Once again, if you do enjoy this content, please hit that like, subscribe, turn the bell notifications on to all so you can be notified every time I upload a new video. And also don't forget to leave me a comment below if you want a full tutorial on how to use Trading Light. Have an amazing weekend, trade safe, and I will see you next week.